Hello. Uh, in the series of revision of SA 3400 series, now we will discuss about SA 3400, that is examination of prospective financial information. So in this first one is what is the meaning of prospective financial information? Prospective financial information is financial information that is based upon the future events or transactions that has not occurred yet, or events or transactions that occurred in future, and the management decisions over management actions, possible actions will be in respect of those events and transactions will be in future only. This is prospective financial information, and these prospective financial information can be in the form of forecast, or it can be in the form of projections. Prospective financial information as per SAE 3400, where the auditor who is examining prospective financial information, whether it is on all material respects, in all material respects as per the best estimate assumptions or hypothetical assumptions. Prospective financial information, the auditor, the standard is not applicable to narrative disclosures in management discussions, or narrative disclosures in case of annual reports of the company. For this this standard SAE 3400 is not applicable. What is the meaning of forecast? What is the meaning of projection? Forecast is nothing but it is a prospective financial information where the financial information is related to the events and transactions that are occurred in the future date that has not occurred yet, and the possible actions of the management will be in respect of events and transactions will be in the future date only. This is forecast. Next, forecast, for example, if the chief financial officer of the company who has forecasted based upon the current trends and growth in the market, there will be increase of sales at a rate of 5% in the next quarter. This is forecast. Next comes to projection. What is projection? Projection is nothing but it is prospective financial information. It is also based upon the future events and transactions that occur in future date that has not occurred yet, and possible actions of the management will be in respect of future date only. But projections can be in the form of financial projections or cash flow projections. This will be in respect of projections. Next, whose responsibility is preparation of prospective financial information? The preparation of prospective financial information is the responsibility of the management. Auditor will not be responsibility of the management. So can professional accountant, services of professional accountant can be utilized for preparation of prospective financial information. Chartered accountants, need of CAs. A chartered accountant in practice can provide attest functions, attest services, or attest functions in respect of historical financial information, where that will be agreed by the various diverse stakeholders. Some of the stakeholders like banks, financial institutions, and prospective investors who can place more reliance on the profit estimates, or it can be cash flow projections, which are reviewed and signed by the chartered accountants in practice or professional accountants. So as per CA Act 1949, clause 3 part 1 of second schedule to the Chartered Accountants Act 1949 prohibits a chartered accountant in practice to associate his name or name of his firm in association with cash flow projections or financial projections, which creates a belief that he vouches accuracy of the forecast. But there are some of the exceptions to this. If the services of the professional accountant are utilized in preparation of a prospective financial information, where the professional accountant discloses the sources from which the financial information has been obtained, and the assumptions and methods that have been followed and reliance and reliability. And third one is a statement that has been mentioned that the financial project he does not vouch as accuracy of the forecast. Then in that situation he can provide services to the management in the preparation of prospective financial information. Now we'll comes to nature of the engagement. Here, nature of prospective financial information. The prospective financial information will be prepared by the management from the sources which are sources or transactions which are not occurred yet and which are occurred in future, which will be occurred in future, events or transactions that will be occurred in future that has not occurred yet, and based upon best estimate assumptions and hypothetical assumptions which will be in the speculative nature. This evidence that is related to historical financial information is completely different with evidence that is related to prospective financial information, because evidence that is related to historical financial information is in respect of transactions or events that have already occurred, but in respect of evidence that is related to prospective financial information is this evidence is related to those events or transactions that have not occurred yet that will occur in future. Next will comes to acceptance of the engagement. In respect of acceptance of the engagement, the professional accountant or auditor, he will draft the engagement letter and he will send the engagement letter to the management, and it should clearly mention, it will be clearly mentioning what prospective information he is going to audit, and he should mention that he does not vouch the accuracy of the forecast, and the nature of the engagement, natural timing, extent of procedures performed, and period covered by the auditor, and responsibilities of the management, responsibilities of the auditor, and if there is any changes in scope of the engagement, then auditor has to see whether it is reasons for the scope and whether it is reasonable or not. These are the conditions that will be mentioned in engagement letter. Now we'll comes to planning and performing of the engagement. In respect of planning and performing of the engagement, first the auditor will obtain the sources from which the prospective financial information has been obtained, whether the sources are prospective financial information is obtained, and reliance and reliability of the sources, and suitability of whether it has been prepared in all material respects, and it is suitable to best estimate assumptions, and it is consistent with hypothetical assumptions, and it is also consistent with historical financial information, and it has been presented as per applicable financial reporting framework or not, and applicable financial reporting framework or not. Next, what are the contents of the report of the auditor? The opinion and report of the auditor. The contents of the report include title, addressee, identification of prospective financial information. Next, identification of prospective financial information, responsibilities of the statement that preparation of prospective financial information is the responsibility of the management. A statement that the auditor will be conducting the audit in accordance with SAE 3400, and the statement that the auditor does not vouch the accuracy of the forecast or projection, and the statement that prospective financial information is prepared as per the events or forecast that the events or transactions that will occur at the future date that will not be occurred yet, and opinion that the prospective financial information has been prepared in all material respects in accordance with the best estimate assumptions and hypothetical assumptions as per applicable financial reporting framework, and list of procedures that will be performed by the auditor in respect of examination of prospective financial information, and next, date of auditor's report, place of signature. This will be the brief contents, and now will comes to opinion that is expressed by the auditor. If the prospective financial information is not prepared properly, if the prospective financial information is not prepared on the examination of the auditor, if the prospective financial information is not prepared in all material aspects as per and it is not consistent with historical financial information, or it is unrealistic, or it is incorrect or unrealistic, then in that situation the auditor will be expressing a modified opinion or adverse opinion, qualified opinion or adverse opinion, if the assumptions that have been stated for preparing prospective financial information is not suitable, or it is unrealistic, or it is something which unrealistic, and in that situation the auditor will issue qualified opinion or adverse opinion, or if the auditor is unable to obtain sufficient and appropriate audit evidence for examination of prospective financial information, and then auditor will explain, the auditor will issue a disclaimer of opinion or withdraw from the engagement. If withdrawal is not possible, he will issue disclaimer of opinion, and he will mention the reasons for issuing disclaimer of opinion, and documentation will be, the auditor will be whatever the audit evidence that the auditor is obtained for preparation of for examination of prospective financial information, he will be maintaining appropriate documentation, and he will mention, he will be including all the working papers in the documentation, obviously for future purposes. This will be mostly all the important and written representation. The auditor will be obtaining written representation from the management that they confirm their responsibility, that responsibility of preparation of prospective financial information, and the auditor he will also obtain representations from the written representations from the management and those with governance regarding unrestricted access to examination of prospective financial information. This will be the brief things in respect of written representations, and okay, that's all. We can conclude this standard. Now we will comes to next standard, that is SAE 3402, that is examination of controls and service organization. We'll continue this in next video. Thank you.